Hello friends, this is Jimmy Singh, broker, owner of Supermax Realty, 647-961-2639, or you can visit my website www.supermaxrealty.ca. So friends, in today's short video, I would like to discuss one of the questions asked by one of my viewers on my channel, Real Estate Edge with Jimmy Singh. And he watched my previous video of buying residential rental properties in personal name versus under corporation. And he has a further question to the effect how typically those corporations are set up. So he's a new immigrant, but he has background in accounting. So we just have a candid conversation. At the same time, guys, I want to emphasize again, before you do any of these things, you should have independent, unbiased consultation with your knowledgeable accountant for taxation advice, benefits, or disadvantages in your case, or you can go to your lawyer to seek independent legal advice. So friends, mostly people buy residential real estate in Ontario, Greater Toronto area, Hamilton or London areas to shelter their liabilities. So they want to protect their assets from any litigation and to gain tax advantages or benefits. So what typically happens is either people have basic what we call single tier structure, or they can have a double tier structure, or they can have a 3-tier structures to own property. So example, a single tier may be a simple Ontario Inc. holding company, which basically is this, and then they buy a house, basically all the asset is held by one of the corporation. That is a single tier. That's very basic structure. And if I find some of my clients who get little bit, experience, then, basically they have holding company on top, and then there is real estate corporation. That's what we call 2-tier. Holding company on the top is kind of an inactive company. It will not generate any income, but it is holding this real estate company, which is we called operating company. And basically it will be like that. So this is a 2-tier structure. 3-tier structure basically is on top is the holding company, which is inactive, and it will also hold a real estate company and a property management company. So you have at the bottom real estate company, and then property management company, and on the top holding company. This is a 3-tier structure. So as I said, holding company basically is an inactive company which will not generate any income, and it will hold 100% of the real estate company and 100% of the separate property management company. So what is the point? The purpose, guys, is to hold cash earned from the rental properties. So let's say, this is your property management company, this is real estate company, and at the top is the holding company. So let's say this property management company charges a monthly fee of 10 to 12% from the real estate company to manage his property, to get a write-off for this company to save taxes, and whatever expenses paid after mortgages, maintenance and everything, the cash flows directly to the top holding company, right? That's the way it works. So what happens is, anytime in a corporation holds more than 10% shares of the companies below, which are real estate corporation, which is operating company, and the property management company, they can pay dividends to holding company shareholders. So income splitting opportunities also arise, because if you have a family member or you have kids which are older than 18-year-old, you can issue them shares to your spouses and the kids, right? And it is actually a great strategy for tax planning, for inheritance for your kids or family, and it maximizes tax benefits and reduce tax opportunities. And the benefit is, if it's a real estate corporation at the bottom and the property management company at the bottom, so that income you can get as employees as a T4, right? So basically, let's say if it's me and my wife and we own property management company, real estate company, so we can draw the income after paying all the expenses as T4. The benefit of getting a T4 is I can contribute to my retirement CPP and EI, employment insurance, right? And the top holding company I can get dividend. So the top holding company basically give you a dividend. And the advantage of the top holding company structure basically is to issue the shares to the immediate family member. It can be voting shares or can be non-voting shares. And at the end of the year, as a director of the top holding company, I can elect to pay dividends. What we call this strategy is also called dividend sprinkling. So it is basically a tax efficient way to pay my shareholders, different kind of, money at a lower tax rate. So property management company, guys, is an active business and it has a lower tax rate of 15.5% versus a passive, company, real estate company, or, if I'm holding in my name or a real estate corporation, my tax, roughly is 50%, right? So it also results in expense deduction to the real estate company, thereby reducing their taxes. Because what happens is this property management is charging 8 to 12% for the property management, repairs, maintenance, and it is billing all these expenses to the real estate company. And after paying everything, it goes to the top holding company and they distribute the dividends. So there are, guys, many benefits, but don't get caught by this fancy, sexy structures, because there's a lot of expense in setting up these kind of, different corporations. And then there's yearly filing, what you call fee that you have to pay. So it might not be a good idea in your case, right? So at the end of the day, guys, the beauty is if you have a top holding company and you start with one real estate company who hold one house, down the line you can have different Ontario Incs. Ontario Inc. 1 hold one house, Ontario Inc. 2 holds another house, Ontario 3 holds another house. So basically you can expand. Future expansion is very easy with holding corporation, because all it's doing is basically is inactive company, and you can expand at the bottom real estate corporation, and then basically your property management company keep billing these companies to reduce your tax liability. Again, this video by no means is legal advice or a tax accounting advice, because these are very narrow fields and things can change pretty quick. So this is just a generic idea to give my audience a flavor what they can do in future with their holdings. If you have further question, you're most welcome to call your tax accountant or a experienced lawyer. And if you're an investor, first time investor or a seasoned investor anywhere in Greater Toronto area, Golden Horseshoe, Hamilton, Kitchener, London, and you're looking to buy your next investment property, or you want to take a benefit of this hot, crazy market to get top dollars, or if you have a rental house or a townhouse or a condo, you want to rent and find a good tenant, give our team Supermax a call. You can reach me directly to my cell phone 647-961-2639, or you can visit my website www.supermaxrealty.ca. I hope, guys, you like this video. If you want me to keep making this video, show some love, smash the subscribe button and give it a like. And if you want to leave any comments, please feel to do so. I will be more than happy to respond back. Thanks for watching, guys. Have a wonderful day. God bless you.